Hello and welcome to Markets Forward, your go-to show where we aim to get you up to speed with regard to today's trading action and also set you up for tomorrow. I'm Nigel and with me is Ekta. Hey Ekta.
Hi Nigel. Yes, it was an overall dull start, you'd say, for the markets. It could have been better, but in the context of what was happening, maybe there was, some kind of positivity. So we had the mid-cap index, which did better. We had the Nifty, which recovered from the day's low. So net-net, given all which is taking place or what is taking place in terms of the global scenario, we seem to be okay.
Well, that's right. Ekta, I would say it's not such a bad outcome by the end of it because we started off lower. But intraday, you did see a lot of buying. And though the headline index was down 150 points, just want to make two factors to point out two things that stood out today. And that's why your portfolio will not be feeling too bad. Pull up the advanced decline ratio. If you just pull up the crisscross lines, at the start of trade, you had only around 400 stocks that were advancing. By the time we wound up, we had around 1,200 stocks that were advancing, on the BSE itself. So you had quite a few gainers in today's trading session. And the mid-cap index, from 10:30 a.m. itself, you had that index that had moved into the green and it stayed in the green. So that's why portfolios feeling pretty okay, Ekta.
Well, yes, absolutely. And we had the IT stocks, which were weak in today's trading session, as well as the diagnostic stocks. So that was one segment which actually weighed down. But we had a lot of stocks such as Masgon Docs, as well as a couple of the other defense plays, which saw a lot of volume traction in today's trading session. And that seems to be the big theme which continues to play out, defense since the past couple of weeks, and that continues to be in focus. But nonetheless, let's now get to our first segment of the day. Hormuz joins in from the wall with the top movers and shakers of the day. Hormuz, over to you.
It was a day that was marred by some choppy moves, but the recovery in the broader markets is something that took precedence in today's session. And we'll start off with some of the names that had positive news flow and reactions to that. And look at Zee Entertainment, 11% higher on that stock after some positive commentary and optimistic commentary shared by the management. Zen Technologies, of course, for the acquisition. Idea Forge for the order that it won. Northern Arc, of course, Madhusudan Kela buying stake in the company there. And Avantel also winning some orders worth close to 25 crore rupees over the weekend. And some negative news flow impact on certain names as well. LT Foods, of course, rice stocks were in the red in today's session, although it did recover from the lows, 6% lower there. Ola Electric, it will be interesting to see who are the sellers in today's block, 6% lower in today's session as well. Dr. Lal and the diagnostic names not doing so well. Credo Brands, the shareholder lock-in ending today. And Infosys, of course, the IT pack, the entire IT pack that did not do well after Accenture's results. Some brokerage commentary impact, and despite the rise in oil prices, Chennai Petro and MRPL continue to remain some top picks for some brokerages, and 7.5 to 12% gain seen in these names. Polycab, of course, on the back of the Jefferies note. Jana Small Finance Bank, and also all of these small finance names after the RBI guidelines doing well today. And KFin Tech, of course, a 1460 target set by Jefferies. In a wobbly market like this, there were stocks that ended at a 52-week high. Apollo Micro is one of them, along with the other defense names doing well. Kolte Patil was another one. Garden Reach, as Ekta just mentioned. Poonawalla FinCorp and Narayana Health also making new highs in today's session. And lastly, stocks that did well on the volumes front. We'll take a look at Alkyl Amines, CCL Products, and Polycab's moves also translated into gains for KEI Industries. BEML and Gujarat Pipavav also had a good day at the office on very strong volumes. Back to you guys.
All right, thanks a lot for that, Hormuz. Well, those are all the top stock movers today. Let's go across to our guests, though. We have Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital, and Jay Tucker from ICICI Securities. Hi, gentlemen. Thanks a lot for joining in. Jay, you go first. The markets get bad news, and you have to buy the dip. That's the way it's been playing out, right? Today, we could have very well been down 200, 300 points as well, but we ended with a cut, and also you had the broader markets that outperform. On the headline index, where are we headed? Nifty and Nifty Bank.
Good afternoon to you, Nigel. Absolutely correct, Nigel. I mean, the dips are getting bought into. I mean, we saw DIs buying for almost 22 to 23 trading session consecutively. They had some, 3,500 crore kind of a sell-off, or maybe, sell positions on Friday, but then we had FIs, in fact, buying but 8,000 plus crore. So overall liquidity is quite good enough. I mean, there were 4 consecutive days of FI buying as well. Almost, I agree that, it was due to the FTSE rebalancing, but then overall the figures have been positive. And on the downside, 24,800 on an immediate basis, Nigel is acting as a support, and positionally 24,500. On the upside, I think that 25,100, 150 is acting as a resistance. So this entire month has gone quite sideways. And I think, Nigel, until we don't get a clear breakout from this range, Nifty monthly expiry might just settle within this range, because despite so much of negativity, we haven't seen that jump in DXY or crude oil prices, or maybe those kind of cut in the global equity markets. And despite Accenture's guidance and the kind of cut which we saw in Nifty IT stocks, the market somehow managed to bounce back from the lower levels. So I believe that the range bound sessions will continue. Nigel, 24,500, 25,150. That will be the range on Nifty. And as far as Bank Nifty is concerned, I think that 56,500, 57,000 on the upside, whereas 54,500 to 55,000 on the downside. These are the levels to watch out for. But I think Bank Nifty is too likely to trade sideways. Broader markets, I agree with you. I mean, they might just provide a breakout on the upside. If mid-cap select Nifty moves beyond the levels of 13,100, Nigel, it would confirm the breakout again, and thereafter it can head to 13,500 as well. So that's mid-cap select Nifty. Otherwise, frontline indices are likely to trade sideways.
Okay, all right. Well, that's on the Nifty. But IT stocks weren't focused today. They really did feel the heat after Accenture reported its third quarter numbers. This is despite positive guidance. Vinny is here to tell us what was the cause of the decline. Vinny, over to you.
Hi, Ekta. So yes, in terms of overall Accenture's numbers, like revenue guidance for the company or the revenue growth for the company in the quarter gone by, Q3 for them, was not a bad quarter. Revenue, they managed to see a growth of 7% above what the street was expecting. FY25 guidance that they've given was also in the range of now 6 to 7% for this year. Previously, it was 5 to 7%. So the lower end of the guidance, they've increased that. Now, where the problem comes in is in terms of deal wins. That's seen a decline of 7%. Bookings for the second straight quarter, that they're seeing a bit of a decline on that front as well. They've said that large deals are not getting converted too fast. So that's some bit of a pressure coming in here. Overall, FY25 guidance remains stable is what they've said so far. But mainly bookings and deal wins not coming in as the company was anticipating or the street was anticipating was a big concern. Now, for Indian IT companies, the highlight that came in was that, federal contracts which are facing a headwind for the company, Accenture is not an issue for Indian IT companies because there's limited exposure there. GenAI, they are seeing a pickup in terms of momentum, which turns out to be positive for Indian IT companies. Margins also 10 basis point increase in terms of margins, but analysts in India expect that Indian IT companies would face pressure in terms of margins going forward in Q1 FY26 or the year of FY26 as well. So that is some bit of a concern coming in, maybe in terms of the current environment commentary, and deal wins and bookings were the major concerns. And that is why that IT today seems to be under pressure. But all in all, it was a decent number that came from Accenture.
Got it. Okay. All right. Thanks a lot for that, Vinny. Sudeep, what are you making of this dip on, on tech stocks? If it was a good reading, I think there was some commentary. If it was a good outcome, then we would say that Indian companies are, will see a positive rub-off. But when it's not such a good reading, then we say that maybe Indian companies, the product profile itself, the services are different. How would you approach the tech names?
Nigel, I completely agree with the comment that our company's profile and products are a little different. Look, I think BFSI is a major segment, and BFSI commentary, BFSI performance was absolutely fine. And I take a lot of reassurance from that fact that there is no damage on the BFSI front. That's pretty reassuring. Government contracts was never a stronghold of Indian IT companies as far as US government contracts are concerned. And so I'm not too perturbed with that. Of course, there is a challenge on deal wins and, big deal wins in particular. And that's a reality of US market today. So we'll have to wait and watch, but I don't read too much negative into these Accenture numbers. Market, of course, reacted in a negative manner because of the deal wins and, other smaller factors. But overall, Accenture guidance also was okay. And I draw the comfort from the fact that BFSI is not damaged at all. And the commentary on BFSI was good.
Okay, Jay, what would your approach be towards these IT stocks on the technicals?
Well, I think that overall IT is likely to trade with a sideways to negative bias in the short run. The reason is that we have seen a good performance or a bounce coming in Nifty IT. Rather, I would say since past couple of months, if you see, since 2 months or so, despite RBI's bonanza, the Nifty IT has outperformed the Nifty Bank, and now the ratio seems to have reached to those levels wherein I think that in a couple of weeks now the Bank Nifty should outperform the Nifty IT. Looking at that ratio and indicating that going forward on the upside, 39,000 to 39,500 on Nifty IT would be a hurdle wherein it can correct until the levels of say 36,500, 36,750. So overall, I think that in a week's time or so, mostly post this monthly expiry, the probability of Nifty Bank outperforming Nifty IT again would be higher.
Got it. Okay, all right. Got that. Let's focus on Zee. That one surged in trade after the company had shared its growth plans for the coming year. They also aim to break even in ZEE5 business. Vamakshi joins us to tell us more with regard to this particular update. Vama?
Well, Nigel, the stock was an outlier in the trading session today. They did upload a presentation and they highlighted what they're focusing on in FY26. One of them being that they expect to achieve break-even in the ZEE5 business as compared to EBITDA losses of 550 odd crores in FY25. In addition to that, they're also executing their business plan and they want to achieve their targets which they laid out in Q4. So with that, just to recap for our viewers, it includes a TV viewership share of 17.5%, ad revenue growth between 8 to 10%, EBITDA margin of 18 to 20%, and unlocking value in music as well as the syndication part of the business. Now, what they've also highlighted is that market consolidation is leading to increased competitive intensity. Resultantly, they're going ahead and increasing their cash balances. And the purpose behind this significant increase is that they want to compete effectively with the competitor, which is the Reliance Disney JV, and they also want to act proactively to address any rapid market share shift. Now, apart from that, they've also outlined their growth levers. They're developing new business verticals. They're building new distribution business models as well. They're enhancing their content offerings to cater to a wide variety of all age groups. And they also are looking at inorganic expansion through either acquisitions or strategic partnerships in high growth verticals like digital, music, etc. So they've laid out an ambitious growth plan, but whether or not they achieve that will be important to watch out for.
Okay, all right, Vamakshi, thanks very much for that. Sudeep, any view on Zee Entertainment?
Well, I think we've been positive, and particularly what is good news is that ZEE5 is turning around. That used to be a huge drain, cash drain, and if they're going to become EBITDA positive and their loss of 500 plus crores get transformed into a positive number, I think that will be excellent development for Zee. Overall, I think the valuation wise there is a significant comfort considering that it was beaten down. Also, the fact that management, rather than focusing on or chasing some M&A, they are focused now on business and business growth and profitability. That's good news from an investor's point of view. So yes, I'm overall positive on Zee Entertainment.
Got it. Okay, all right. Well, let's focus about the sector then that's been on the offense. The defense stocks, they were buzzing in trade yet again. A lot of order wins is what we saw from a few of these companies. Ria joins us to tell us why these stocks were buzzing. Ria?
Well, yes, Nigel, a lot of defense stocks were buzzing in trade today. Let's take a look at 4 companies that were in focus on the back of individual news flow. The first one was Idea Forge, hitting an upper circuit of 10% today after the company received an order worth rupees 137 crores for the supply of mini UAVs as well as accessories to the Ministry of Defense. This order is to be delivered within the next 12 months. And remember, the company's order book at the end of FY25 was just rupees 13.6 crores, which is why this is a very substantial order for the company. Moving on to Zen Technologies, 5% upper circuit for this one as well. The company has announced the strategic acquisition of a majority stake in TISA Aerospace Private Limited, which specializes in developing indigenous loitering munitions and UAVs as well. And this marks the company's entry into the UAV space as far as the defense segment is concerned. For BEL as well, this one was in focus, up over 3% today after securing orders worth rupees 585 crores since the 5th of June. Remember, the company had said that they're expecting an order inflow of around rupees 27,000 crores ex of QRSAM in FY26. And so far in FY26, the company has secured orders worth about rupees 6,820 odd crores. The last stock that was in focus today was Solar Industries, closed mildly in the green today after receiving an order worth rupees 158 crores for the supply of defense products to the Ministry of Defense. This order is also to be executed in the next 1 year, but this is not a very significant order for the company, since the overall order book of the company at the end of FY25 was about rupees 15,000 crores.
Okay, all right. So the defense stocks continue to be in focus. Jay, the defense stocks have just been going from strength to strength, but what would probably be a real standout in terms of the technicals for you?
See, I think that overall defense definitely is into the good momentum and it's likely to continue as well. But from a derivatives technicals point of view, I would say that HAL and BEL, these are the two stocks wherein we are seeing good long build-up. There had been a continuous long unwinding which had happened earlier in both of these stocks, and the price when they had corrected last year, which started from mid of 24 until March of this year, and almost 6 to 9 months of correction to consolidation is what we saw on Nifty Defense and these names was mainly on account of long unwinding. We did not see much of stocks getting built up here. And now after the positions having got quite light, the stocks have again started to move up, providing a breakout on the long-term charts, and the overall trend has been positive. So I still believe that HAL and VEL, these are the two names wherein there is much more upside left. BDL and Mazgao, out there the breakout has to happen, but then we don't have much of the FNO data out there, although we are seeing long build up out there. So BDL and Mazgao can do better, but then out of these four names, I think HAL and BEL, these are the two stocks which are providing more data and providing more comfort on the long side. As a disclaimer, we already have a buy recommendation on HAL.
Got it. Okay, all right. Jay, before we let you go, any view on Reliance Industries? That one has been holding one end up. Last 6 months has actually been an outperformer. Your take?
I think that, Nigel, this is likely to be one of the outperformers going forward as well. The kind of consolidation in Reliance which we have seen, that is within 1380, 1400 on the downside, to say 1450, 55 on the upside. I think the possibility of a breakout on the upside is quite high out here. Despite the market volatility, we haven't seen corrections coming out in Reliance. Rather, we have seen correction coming in BFSI. But Reliance has somehow managed to hold on to this range. And this range is likely to provide a breakout on the upside, post which I think Nigel Reliance is likely to head towards the levels of 1550. So we are positive in Reliance. I think till 1400 to 1380 levels are held, the upward breakout is quite likely.
Okay, all right. Well, you're liking Reliance. But, before we just wrap up the conversation, just wanted to get a sense in terms of a couple of these stocks such as Hero, Moto, as well as Interglobe and Indocin, if you would have a view on them, as well as BSE. If you could give your sense in terms of a couple of these stocks, Jay.
Sure. Hero is moving out of Nifty, so and out there we don't have a positive view. In fact, rather if you want to look at Nifty Auto, particularly in two-wheeler names, then TVS Motors is one stock which we are liking, and I think out there the breakout has happened. We already seen long build-up out there, so a positive in Nifty Auto. But particularly in two-wheelers, we are looking at Eicher Motors or maybe TVS Motors. And last rate would be Bajaj. These were the three names in that order. M&M particularly, from the four-wheeler names overall, is looking quite positive. We are bullish out there on M&M as well. As far as Nifty Capital Market Index is concerned, that is also doing quite well. I think BSE has already seen quite a good run-up. We might see some profit booking coming out there. It might continue. It may or may not hit again a lifetime high in the near term. But then MCX out, has provided a fresh breakout again. It's been trending higher, and I think going forward in July series as well, MCX is likely to do good. It might head towards the levels of 8500 to 8600 on the downside. Now we believe 8100 is a very near-term support. So as of now, MCX is relatively looking positive or better than BSE from the Capital Market Index.
Cool. All right. Thanks a lot, gentlemen, for joining in and giving us your view on the Nifty Bank, as well as all the stocks that we did discuss. Well, time to slip into a short break. We'll get you key market voices on the US tariff and the wars around the geopolitical uncertainty. Let's listen in.
A significant amount of tariff de-escalation. And I think the markets have absolutely responded to that when you look at the price action from the beginning of April to basically now. We were sort of getting to a point where expectations of tariffs was in the mid-20s. Right now, that's landing somewhere. The landing zone is, call it between 10 and 15%. Significantly higher than where we were in 2024. But given what we had sort of thought it might be, it's still, there's been some de-escalation. Earnings have been strong. Growth weaker than 2024, but we're not looking at a recession in the US anytime soon. And at the same time, we have a Fed that's sort of signaling that they're still willing to entertain about 2 cuts this year.
According to market, all this is not going to have any material or lasting impact, and both are important, neither material nor lasting impact on the cash flows of the corporates. And that market seems to be quite certain about. And hence the market, with a few points here or there, a few percentage points here or there, has recovered with each of these hits that we've seen. It seems like we should have a relative phase of calm now on the geopolitical front, especially when it pertains to Middle East. Once US gets involved, and I'm not saying who's right, who's wrong, because I'm not that learned on the subject matter to make those conclusions, but just purely from the market's perspective, I think the worst of this geopolitical event, the most recent geopolitical event, is behind.
Welcome back. You're still tuned into Markets Forward. Now let's go across to some key corporate voices. First up is Biocon. It has decided to complete the QIP on the back of strong demand from domestic and foreign investors. Post this fundraise of around 4,500 crore, the promoter will now hold 54% as against 61% in the past. Large part of the proceeds will be used to give exits to PE investors. The management adds that this QIP will only address the structured instruments, adds it expects cash flows to improve, aiding debt repayment. That's now all the management expects, around 9 to 10% reduction in interest costs from March 2027 on an annualized basis.
Next up is Jana Small Finance Bank. The decision of the Reserve Bank of India to lower priority sector lending requirement for small finance banks from a total of 75% to 60% is a big boost for small finance banks like Jana Small Finance Bank. Commenting on this, the management says that this is a welcome move and will allow the bank to diversify into different categories of credit.
Okay, and before we wrap, let's bring you some key market events to watch out for. Vamakshi is here with the key events.
Well, Ekta, we'll be keeping an eye out on some economic cues. The US will be reporting consumer confidence data, so we'll be watching out for that. As far as corporate action is concerned, we'll also be keeping an eye out on stocks that go ex-dividend, which includes Polycab India, Alkyl Amines, as well as Vedanta. Keep an eye out on all of these counters. Apart from that, keep an eye out on Aztec Life Sciences as well, because a board meeting is scheduled tomorrow to consider fundraising. 3 new IPOs open tomorrow, so we'll also be keenly watching out for that. Kalpataru Limited is one name. Apart from that, Ellen Bari Industrial Gases as well as Globe Civil Projects will be something that we'll be keeping an eye out for. And lastly, let's keep an eye out on some other important events. Fed Chairman Powell will be testifying before the House before the House Financial Services for the semi-annual monetary policy report. And lastly, that there is a 2-day NATO summit beginning tomorrow in Hague, Netherlands. So that's something that we'll be also keeping an eye out for.
Okay, all right. Thanks a lot for that, Vamakshi. Well, on that note, though, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.